learning the impact, the decisions that have been made by the SEC, and especially technical issues, but also accounting-oriented issues that you need to know. Your people have to understand these issues to let the technical people do what they do. You'll find that it's a brand new Chapter 6 in the Edgar Filer Manual, version 10, 56 pages or so, expressing approximately 200 sets of rules that companies are going to be learning in order to be compliant with that guidance.
So as we drill down on the rule a little bit, we have to realize that in the first year you are required to file. It is a fairly simple idea. You are tagging the primary tables, balance sheet and income statement and whatnot, but then in the notes you're tagging those as block text, meaning here's note 1, here's note 2, here's note 3. So big picture, year 1 is about 300 ideas you have to tag. Year 2, the concept, and we still need more information on this, but it looks like you're tagging the notes in a lower level of detail. So big picture, year 1's 300 ideas, year 2 is probably 3,000 ideas. So a much more significant level of tagging, much more granular level of tagging in the second year. This information would be filed through Edgar, but it will also be posted on the company website should they maintain one. That's not a big deal, but in the demos that I showed earlier that we'll put up in a file, in those demos you can begin to see through the Microsoft Investor Central site what XBRL actually enables, not only for the company to lower their cost of producing information, but in terms of investors actually being able to analyze that information in a much more efficient manner. Other concepts in the XCC mandate really relate to the liability provisions. It appears that there's a 2-year carve-out on liability requirements, and they'll be treated as furnished documents, not file documents, for what appears to be a period of about 2 years. And that there's also no required auditor involvement on the company reports. I think Eric's going to talk about assurance in a few minutes, but in the final rule, we do not believe that there will be any required auditor involvement. There are a number of implementation considerations that every company is going to have to go through, and going back to the barcoding example, it's almost like the barcode when it was first introduced, it was applied by inventory clerks when they put the products on the shelf. Well, this is a lot about the same idea that's like tagging financial statements. Again, it's not about tagging the financial statements, it's about the process. But the grocery store managers, they put the tags on the products for about 2 or 3, 4 months. And then they figured out, well, if I push it back further in the supply chain, then I can realize the benefits in that supply chain from standardization. And therefore, it gave them an incentive to do that, an economic incentive. So as you look at the implementation considerations, you're going to be faced with those same kinds of considerations. Number one, I can outsource this to a third party, maybe my printer or someone else, and I can deal with that in year 1. And year 2 might be a little bit more difficult given the volume of content. Another consideration is which of the taxonomy views should I use? Is it going to be the banking taxonomy, investment management, commercial, industrial, insurance, or other?